Hi, welcome to the market alert for Friday, the 3rd of November 2023. So yesterday we saw a face-ripping squeeze and stocks soaring as yield curve and the dollar dumped. It didn't do a lot for silver though. More on that shortly. Post-Fed stocks rally continues, aided by dovish US data and Bank of England on hold. No surprise there. And the US stocks gained and yields declined as labour cost data added to the dovish impulse there. So economic news today, it's a big one today. We've got the Non Farm Payroll numbers. They're out at 12:30, forecast 178, previous 336. If it comes out higher than the 178, they'll reduce the 336 to make it look fine, because that's what they do. That's what they do every time. If you look at the previous data, look at the detail, you will see that they get revised, and you'll see the little arrow there. So this is a tried and tested trick that they do all the time, so don't be surprised if that occurs. Implied volatility has dropped dramatically as well, so as the markets have moved higher from 16.29 there down to 11.95. We only had about an 80% increase in the implied volatility there, didn't quite get to the 20. Market is now moving higher. It looks like the Santa rally is well and truly on at the moment, unless there is something of a geopolitical nature that comes along and kicks it in the teeth. But otherwise, we're already set. You can see by what we had yesterday, the market moving strongly to the upside once more. So let's have a look at the markets. Kick off with the Dow. In the Dow, we can see that we've got to the 200 MA. We're above yesterday's high already. We just need to continue this momentum and then just take out this target to the left there, or to the right, as it's marked up on the chart. The target on the left, price on the right, 34,146 is the next upside target. Depends whether the 200 MA impacts on this. We've had 4 days to the upside now for the Dow. The market's moving quite nicely there at the moment, but due for some profit taking. 30-minute chart says it all, up all the way. Never one red bar, that's all we had yesterday. Market continuing that follow through from Powell on Wednesday evening, with the Bank of England doing exactly the same, and no doubt the ECB in the next couple of weeks as well. In the German DAX, also the market moving up. We've had rising lows for the last 3 or 4 days. Stuck at the 50 EMA at the moment for this market. If we go from this high down to this low, you'll see that we're stuck at 89% retracement as well. We need to take this out before moving up and taking out all of these other areas of resistance as well. But certainly got the momentum there at the moment, as you can see how it's gone through all of these other fibs, trading up to where it's currently trading at the 89% and 62 from these 2 points, as can be seen there. So the market's got a bit of resistance there, but if we get through this, we take out this high, the pink line there, and then we've got 78 and 89, and no reason why they can't do it with the non-farm payrolls. Yesterday, big move to the upside for the German DAX, 150 points, then got stuck in the sideways range and then followed through on the electronic late into the evening. In the S&P 500, through the 200 MA, through the 50 EMA, and again moving up quite nicely there. We just go back to the high there, down to the low. You'll see that we're heading for 78, 89 as well on the upside. 30-minute chart, just the one red bar like in the Dow, or two actually. We've got another one there over a 30-minute period, continuing to move strongly to the upside. And in the FT100, also moving now, as it can be seen there. It's just drawing some fibs on this, stopping at 50% retracement. We're through the 20 bar, 50 EMA is in the way there, but we are above yesterday's high currently, which you can see there. During yesterday, the market moving up strongly to begin with, waiting for Bailey to do his magic, or speak his magic, and then continuing with the Dow in the afternoon. US dollar hammered to the downside, as they said in the headline. Hardly hammered in my opinion, but down on the overnight as well. Down below the 20 bar moving average, but had no effect whatsoever in allowing silver to move up, which we'll look at now. So in the silver market, dollar down, silver down. Completely the wrong relationship there, but it doesn't surprise me anymore. Today we start to see the sell-off from the NFP numbers of silver moving sharply to the downside, I suspect. And 30-minute there, you'll see exactly the same. Sold off yesterday, continuing down as well, just already at the low. So expect a hammering in silver today. Gold holding because of the Middle Eastern conflict, but there you can see down, but managing to make its way back. Unlike silver, if you look at the 30-minute chart, which is already down towards the low. So let's have a look at the gold-silver ratio before we finish. So in the gold-silver ratio, expect this to continue to move to the upside. As I spoke already, 90 is the first target, then we head towards the 100 level. They're just not going to let the price of silver move. Simple as that. They're going to try and hold it and continue to hold it. When you look at the price of everything else, it's just unacceptable. But there you go. It is what it is. Okay, that's it for this one and for this week. Let's see what the non-farm payrolls bring out. And with that, have a great weekend and thanks for watching. See you in the next one.